Our next guest was the CEO of Hut 8. She is now the CEO of ReserveOne, Jaime Leverton. Welcome to the show.
Thank you. Always good to be here.
I guess Sam has a question for you. How are miners going to manage the halving?
I will say, Jaime, I was at a private talk that you gave in New York City at someone's penthouse apartment. I think it was a year or two ago.
I feel like it was Novograd.
I think you probably know what this was. And I remember thinking, this person knows more about mining than I will ever know in my life. And it was really fascinating. So I want to thank you for that moment. But I do think it's something that I wonder about of how, just before we get into ReserveOne, how the mining industry, in your opinion, because you just know it so well, is going to manage over the years the continued halving and the rewards just continually going down.
Yeah, I mean, I think we saw a glimmer of what the future should look like in the ordinals boom a couple of years ago, because really over time, the miners will be dependent on transaction fees. So the more building we can do on the Bitcoin blockchain itself, the more we can support the network and drive transaction fees into the underlying ecosystem. That's going to be critically important for the long-term health of miners, which we need. Miners are responsible for the security of the Bitcoin layer. They're responsible for processing the transactions. They bring new Bitcoin into circulation. They're essentially Visa, MasterCard, and the Mint and security all rolled into one. So a very important part of the ecosystem that will be supported with transaction fees. And as I say, we saw it with the ordinal boom. There's still over 100 years before the last Bitcoin comes into circulation. So we have time, but it's going to be about transaction fees.
I just want to go off script for 1 second, which is, I love that, because I think the ordinals did show us that there can be tremendous transactions on it. Do you think the Bitcoin community understands or gets jealous of the sheer volume of stablecoins that are happening on so many other networks? And is it an area you see that coming to Bitcoin?
I don't like to speak for the industry as a whole.
Your opinion will count.
But we were in Washington last week, myself and a delegation with the Digital Chamber, including Michael Saylor and Tom Lee and lots of people that are really important to the ecosystem. And that thread came up a few times over the course of the day that Bitcoin predates stablecoins, and yet we've got the Genius Act through, and we're still very much in conversation around clarity and the strategic Bitcoin reserve. So yeah, I think there is a little bit of jealousy that stablecoins have kind of leapfrog Bitcoin, and we're still fighting a lot of battles in the Bitcoin world that we've been fighting for years. When we think about the narrative that still comes at us about, Bitcoin being used for illicit purposes. I can't believe that argument is one I still have to deal with on a daily basis, but it's true. And stablecoins have managed to just kind of avoid a lot of that entirely, and now they have proper regulatory clarity, which we do desperately need in the United States and Canada for the rest of the ecosystem.
I guess that really highlights the importance of Bitcoin DeFi. That's been a theme at the desk here today. I mean, from your perspective, what happens if DeFi on Bitcoin doesn't play out the way so many industry players hope it does?
I think it will play out. It's just a question of timing. How long does it take? What forms does it take? I think it's really difficult to say. I go back to clarity, that market structure coming out of the federal government in the U.S. is really, really critical. I think we're all watching that very carefully and hoping that we see something in the next few weeks come out of Washington that gives us more direction, because really that's what the ecosystem needs to focus their energy and their efforts and their building.
All right, Jaime, ReserveOne.
Yes.
Yes. Tell us about it. It's expected to launch in Q4. It's a public company.
Yep.
What's the thesis? I know it's looking at this digital asset strategy play.
Yes, so we expecting to start trading on the Nasdaq by the end of the year. We announced actually this morning, our time, that we have confidentially filed our S4. So we're in that process with the SEC. I would say I expect a different experience with the SEC than my last go around with the Gensler regime, which warms my heart a bit. We announced our business combination agreement in July. We raised $750 million in a pipe, and then there's $287.5 million sitting in the SPAC trust. We are inspired by what we're seeing from the federal government. So the initial allocation will be 80% Bitcoin, inspired by the Strategic Bitcoin Reserve, and then 20% into an alt sleeve inspired by the digital asset stockpile. So expecting a mix out of the gate of Ethereum, Solana, ADA, and XRP, and that will evolve as we get more clarity from the feds.
All right, so one equity that gives investors exposure to that 80% Bitcoin, 20% other assets. Just talk to us a little bit more about the product. How is this different than some of the other digital asset treasury companies we've seen and some of the other miners who are mining and creating treasuries and investing the yield from those treasuries into other products?
Yeah, so we're the only diversified digital asset treasury company. We've got a really unique management team and board of directors assembled. We are going to be running active yield generation strategies on the assets as well. We're lucky enough to have Sebastian Bea, who is the president of Coinbase Asset Management, on the team as our president and CIO, so responsible for that yield generation. And the other thing we've built into our structure is the ability to allocate up to 10% of our AUM into high conviction venture opportunities. So really giving the investors a one-stop shop for exposure to the crypto ecosystem, where we do the work as a sophisticated management team and board of directors, lots of experience across our team, not just in crypto with myself, Sebastian, Reeve Collins, Gabriel Abed, John D'Agostino, but also private equity coming from Chin Chu and Wall Street, of course, and then Wilbur Ross bringing Wall Street and regulatory, which Gabe also has as the Barbadian ambassador to the UAE. So a bit of an Avengers strategy as we assembled the team.
I was thinking that. Yeah. I was like, the Avengers of crypto, okay.
It is, yes. I just want to be ScarJo. Trying to make it stick. But yeah, that's the team, and super, super excited to bring it to market. We really think that there's a new class of investors looking for the opportunity to get this kind of one-stop exposure, which you can't get in the other assets that have come to market to date.
Jamie, I'm just interested in the 80-20 play here, and obviously there's a fair bit of maximalism coming out, but that 20%.
Are you accusing me of still being a maxi?
Not at all. But that 20% also is full of opportunity, right?
That's
every one of those projects has a loyal community, has a big moon opportunity coming. So, is it partly just to say we want to be in the big five and we're going to figure out how to make this really work? Is there some thesis that says maybe this goes 70-30 if we see certain criteria met? I guess, how strict is your 80-20?
Yeah, so it's actually based on a combination of free float market cap with an ability to generate yield override, and that gets you to the 80-20 today. But if that alt sleeve outperforms and the free float shifts, then the allocations will dynamically shift on that basis as well, which would be a good thing. And honestly, I think we should expect a halo to come on to the tokens that are included in that digital asset stockpile once we get clarity, once we see that kind of incremental level of support from the Fed coming to those chains. I think it should be really, really good for the ecosystem and for the builders in those communities, and we're here to support all of the above.
What are the assets in that 20? I know there's XRP, ADA.
Yeah. ETH and Solana.
Oh, I guessed correctly.
You did. Yeah.
Will you be adding assets?
Yeah, based on what we hear from the Fed, I expect they'll add a few more assets into the stockpile when we get more clarity. Remains to be seen when we'll get that clarity from them. But as I say, we apply the mechanism of weighting. So Ethereum and Solana end up weighting higher just based on their free float metrics and their ability to generate yield. But that's where the management team comes in. And obviously, we're making the best decisions, we think, for our investors and our returns.
Jamie, thank you for joining us. I know you have a stage to get to.
I do. I have to run upstairs and get on stage, but thanks for having me.
Good luck with it.
Yeah, great to see you guys.
You as well.